Foundation Fighting Blindness. Together, we're winning. Help us end blinding diseases at fightingblindness.org.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer. Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Owning Real Estate in Retirement. Mike, when we talk about someone who might be considering a move from where they've lived pre-retirement to a new location, what are some of the main things they need to consider?
Yeah, I think that they need to focus on the costs first and foremost. I know a lot more goes into a decision like this than the costs alone, but what I find consistently is that folks in retirement overestimate how much they can save by moving and underestimate how much they're going to spend as they age to stay in their home. And so both of those factors are important when considering this big decision of, hey, do I consider downsizing or moving to another area?
One of the other things that we've seen over the past few years is that some of those estimates of costs can change quickly as well. I think about insurance in Florida as an example, property taxes in parts of the country. These are things that you need to account for, and that those costs might change as you go through retirement.
Yeah, I mean, some of them are easy to identify. Like, yeah, insurance costs have sure gone up a lot, and maybe they'll continue to do so. Electricity costs are another one. The others, though, are much more difficult to quantify. Like, I currently snow blow my driveway. How much longer will I be able to do that? How much longer will I be able to climb up the ladder and clean the gutters? Like, these are really complex questions that you need to very much think through as you age in your home.
Our guide is titled Owning Real Estate in Retirement, and there are 2 ways to request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. Again, the guide is titled Owning Real Estate in Retirement, and you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark Vonner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. affiliated.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck Paul Tucker with you here, and again, you take a look at what's on the docket this week for us, and pretty quiet as far as economic data and also earnings, of which we're now through 91% of the S&P 500. So there's just not much juice left on that front. But the big news, and what we're going to be watching closely this week, is do we end up getting a resolution to reopen the federal government? Late last night, the Senate, by a 60-40 vote, did agree to take up a House-passed bill that effectively is, trying to make its way through Congress to reopen the federal government. But we still have a couple other steps that need to be done, including the final passage of that legislation in the Senate, and then they are likely to have some amendments relative to what the House passed. And so it's going to get kicked back to the House, where they will have to then approve it. So as we sit here right now on Monday the 10th, the federal government still not reopened, but all signs point to the likelihood that it reopens in the coming days, probably by the end of this week, which would still mean that we have now seen the longest shutdown on record, topping 40 days and potentially ending up somewhere in like that 43 to 45-day window, Paul.
Yeah, it's certainly something that is welcome to see some progress here in terms of the two sides coming close to reaching an agreement. Really, a lot of this was due to some debates regarding some of the ACA extensions of $30 billion per year credits. It seems as if on the American Care Affordable Care Act that the potential resolution for that is to have the money deposited into flexible savings accounts rather than sending the money out to insurance companies. So just to back up for a second, these credits here are regarding offsetting the premium costs for people who are not covered by a typical employer-sponsored plan on the healthcare side of things. This was something that was a huge area of contention between the Democrats and Republicans, and it appears as if this potential workaround, which would need to be ironed out a little bit here, because typically these flexible savings accounts are for someone who is with an employer and covered by an employer-sponsored plan. On the healthcare side of things, these may be the area that would receive some of that funding rather than the insurance companies getting in general. But again, still a lot to be done here. Obviously, the lead story here is some progress, and this moving its way through the House would be welcome news if that is the case.
So I think, look, the assumption I am going to make is that it's very likely that the federal government reopens later this week, and so I'm not really going to discuss further machinations on that side of things. But now we get to the question of, okay, once you're through this, now we start to see if there was any economic fallout as a result of it. And ultimately, that's going to start to play out over the next month or two as we start to get the government-produced data coming back through. We'll start to see what we're seeing on that side of things. And so we'll get a little bit more accurate of a picture as to where the U.S. economy currently stands, just because as of right now, it's been kind of hard to tell what's going on. I mean, certainly we do, again, have some private data sets that are out there that are made available, but ultimately you have a standard cadence of releases that you expect and that you get, in particular, in a few key areas, most notably jobs, inflation, retail sales, I think are the three big ones that I tend to look at. And so getting back to that regularly published data will help to give us a little bit of clarity as to exactly where the U.S. economy stands and answer the question of, hey, was this just a minor disruption, to the U.S. economy? Was there, relatively minimal damage and things, get back to normal pretty quickly? Or because of the length of it, again, the longest one ever, was there some greater damage caused? And quite honestly, I don't know exactly what we're going to see. I lean towards it still was probably short enough that it didn't cause any major damage to the broader economy. But we're going to have to see how things evolve over the next couple of months, and we'll see what we get on that side.
If we were to get a resolution by the end of this week in terms of future jobs reports and things like that, would we get November's, or we're too late because we're kind of in the middle of the month where they would typically collect that survey data, right? So would we just be on December as to when we potentially would get info?
Don't know.
Yeah.
Don't know. What I do know is what we will receive, like shortly after the reopening and authorization, we are going to get the September jobs report then.
Nice.
Which they had basically finished but couldn't release because of the shutdown. So we will know what happened in September. October, most likely a washout. November, I think, is a toss-up. So it's very possible we don't get any up-to-date jobs data until early January, which then also raises the question of this bill to reopen the federal government would only authorize funds through January 30th or 31st. There is a non-zero chance that we are back in this situation 90 days from now.
We should just save some of our segments and re-queue
Tuck,
them up.
What are the how do we tape this so that we can play the last month again in February? Can we do
we're
that?
recording now, yeah.
Do we have tapes?
We're on YouTube. You can find it there.
Do they have tapes?
Yeah, I'm pretty sure they got tapes.
They got tapes.
Cassette tapes specifically.
It's wonderful. Betamax. So I think that when we look at this, don't know exactly what the economic fallout's going to be. I lean towards this shutdown probably still wasn't long enough to cause any lasting damage, but was starting to get close to that point. And if it had gone on another week or two, I would have started to be concerned, just because then you're talking about nearly 1 million workers missing potentially up to 2 months of pay. And yes, they will get that back pay. But ultimately, if you're missing that much time, it can really cause some problems that can, become local and regional and in nature. And then, does that become a national issue? Potentially. So this is where we stand as we look at the shutdown side of things. While we're still waiting for a resolution, air travel likely to continue to worsen because of reduced schedules. The latest numbers that I saw from over the weekend were pretty bad, with on one day over 2,000 flights being canceled and upwards of 7,000 being delayed. So about a quarter to a third of all flights either delayed or canceled. To put that in perspective, in the last couple of years, remember, you got 365 days out of any particular year, and that means in 2 years you've got about 700 days. Sunday was the 72nd worst day for cancellations out of the last 2 years, which means, again, kind of a top 10% day for cancellations and delays. Not horrible, but not what you want to see. It certainly is inconvenient, and that inconvenience is going to still be there the next few days because you still don't have a full resolution on this.
And it seems like this was likely one of the catalysts to kind of get this over the finish line in terms of the resolution for the Republicans, Democrats to get the government reopened. And it's something that I know for a fact that you had alluded to, that 2018, it was a similar sort of cliff that we reached, where once you start having 18 of 22 traffic controllers call out in Atlanta and the problem spreads out wider, then you're going to have a lot of angry travelers, and that will get that's what's happened here. You've got some of the folks in Washington responding to this and trying to push this thing through.
So, again, expect to see some continued travel delays this week. Might even persist into early next week, just because, look, when you're trying to get equipment and crews from point A to point B, if you've got delays that last until this Friday, it might take until early next week to get things squared away. It'll take a few days after that. But it does look like, again, assuming that we get a deal later this week, which I think is increasingly, the case, it's very likely. More likely than not, unless we have some crazy weather, things should be in pretty good shape for actual Thanksgiving travel, starting Monday, Tuesday of Thanksgiving week. Let's take a quick break here. When we come back, we're talking about the AI boom. That's how they pronounce it. And so we'll talk about whether it got a reality check last week after this.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
Mark Varner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit DAV5K.Boston. That's DAV5K.Boston.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate planning isn't just about taxes. It's about peace of mind. At Cushing & Dolan, we believe your plan should protect your family, not complicate your life. A joint revocable trust can help you do both. It lets you avoid probate, which means no court delays, no public filings, and no stress for your loved ones. Your estate stays private, and your family stays in control. Our new guide, The Simplicity of Joint Revocable Trusts, also explains how a trust can protect your children's inheritance from creditors, divorce, or bad financial decisions down the road. This guide makes it easy to understand why a joint trust may be the smart move for your family's future. Call 866-848-5699 right now and ask for your free copy of The Simplicity of Joint Revocable Trusts. That's 866-848-5699. Or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done.
All right. Wall Street Journal has a piece. It's titled, "The Week the AI Boom Got a Reality Check on Wall Street." And we actually sent Tucker down to Wall Street with a microphone to go and get a little bit of audio of what was going on there. And so he's going to play that for you right now.
And boom goes the dynamite.
That's exactly what happened there. So here's the thing. The last week and a half, couple weeks, has been not great for tech stocks. In fact, it's been quite bad for a number of them. If we look at 1 week performance, NVIDIA, even with a rebound today, still down about 6%. Oracle down about 6%. Palantir down about 8%. AMD down about 5%. Tesla down about 6%. Qualcomm down 5%. Salesforce down 9%. You know, like it's been kind of gross out there. And remember, this is happening with like a 2 to 3% rebound in a lot of these prices today. So I think the question is, and it's the same question that always matters in investing, is what we saw the start of a new longer term shift? Is what I'm seeing something permanent, or is it temporary? And you know, ultimately it's going to be determined by two things as it relates to these tech companies and artificial intelligence. The first thing is going to be, hey, can you continue to grow your earnings in such a way that all that CapEx doesn't matter? And the second piece is, well, if you can't, what does the rest of your business, look like then in terms of its growth? Mm-hmm. I maintain, I don't know how these questions are going to be resolved, but 26 and 27 are going to be the years in which these are answered. All these companies are trying to be like, hey, our 2030 revenue is going to be this and that. And it's like, guys, don't give me 5-year revenue projections. That's like the guy who walks into a presentation with a bunch of VCs being like, well, the total available market
the old TAM.
The TAM for people who exercise is 200 million people. And if we get just 1% of that, it's like, okay, like you can take that. It's not even worth the paper it's printed on. Like, go just flush it. Like, call it a day. So tell me next year, hey, we're investing $500 billion in AI data centers. What kind of revenue are you going to be able to get from that? Because that depreciation is going to start hitting your financial statements pretty heavy in about 12 to 18 months. And you got to be able to deal with that.
Yep, that's exactly the story here, and it's going to continue to be publicized over the course of the next 6 to 12 months. Ultimately, there will become a breaking point one way or another where companies, like you said, are going to have to point to what type of revenue growth are they going to get from it. Mark Zuckerberg had a quote on this whole subject of just the front loading of investment of building out capacity, where he basically mentioned aggressively front loading, building capacity for computing demand is preparing for the most optimistic case with AI. And if for some reason that doesn't formalize, then the slow building now of new infrastructure will grow into it. And that latter sentiment of, okay, if it doesn't hit our most, optimistic use case here, then we've kind of built out for new infrastructure. That would be kind of the worst case scenario for markets, and when you'd see a lot of bludgeoning on some of these companies if for some reason over the course of the next 12 to 18 months there was any indicator that the cart was truly put in front of the horse and that all of this capital expenditures are for something that's going to take longer to materialize in terms of revenue impact. That's the story here, and I don't know the answer to it.
And look, I've said this before. I understand the financial incentives for Zuck. And not just Zuck, but for, Satya Nadella and Sundar Pichai, and you go through the whole list of them. I get it. It's, okay, I could spend $250 billion over the next 5 years. And if this works out, I have a multi-trillion-dollar opportunity in front of me. If it doesn't work out, stock price is going to get hit pretty hard, but I'm not going to go out of business. It's not, something that ends my company. And so, yeah, I'll take that chance. That's how they're thinking about it. For someone like Sam Altman, it's even more clear. It's hey, I don't have anything right now, and this is my chance. And if I can get all these other people to commit to giving me their money so that this could work out, I could be a multi-billion, a 400 billionaire and this and that.
Yeah, it doesn't have any. He has a lot, but he's got to keep it going, keep the momentum going.
Most of the skin in the game is not his.
Right.
It's ultimately, if it doesn't work, Sam goes back to being the same person he was before all this. It's it's not his money that they don't have the revenue in order to spend this money, so it's not their own. So you understand the financial incentives for all these people, and objectively, it's the right move for all of them to make, but we can still look at it and be ooh, this might not go well. And this is even before you get to the fact that these are not people that have proven they can ethically steward this kind of power. And it's pretty clear with how poorly this new technology is being shepherded in terms of, what they're finding important in terms of how they're building it now. I mean, again, you talk about the AI erotica stuff that they started talking about a couple weeks ago. You've got multiple pieces that are out now that, quite honestly, if you haven't read them, just Google around. They're out there on cases where people and kids have been told in no uncertain terms that they should take their own lives by these artificial intelligence platforms. And quite honestly, the fact that there aren't congressional hearings about this is kind of ridiculous, that technology is actively telling people to hurt themselves and no one seems to care is kind of wild to me. So I'm just not sure that these are the people that you want shepherding something with this kind of power, because they don't really seem to care about humans very much. They just don't. But it is what it is. So we'll know in the next 2 years whether AI is going to work out as, a viable large-scale business with this kind of investment or not. I think it's very likely that we continue to use more and more AI in our daily lives, but we use the internet a whole lot more than we did 25 years ago. And a lot of the companies that started the internet, they're no longer here because they spent too much money and it didn't work in those finances, in those terms. So that's kind of where we are. Let's see. Other things that I do want to get to. We're 91% through corporate earnings for Q3 now. And the Q3 earnings are really, really good. But why are we not seeing individual companies being rewarded the same way that we have been when earnings are normally good? What have we actually been seeing in response to that? Let's take a quick break, and then when we come back, we're going to cover this Q3 earnings season, which has been really good, but for the average company, it hasn't really meant really good things for their stock price. Why the divergence? We'll discuss after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, a lot of people think estate planning is complicated or something they can put off. Can you explain how a joint revocable trust can actually make things simpler for couples who just want to protect what they've built and keep things easy for their family?
Sure. Joint trusts are really so underutilized, but they're really the most important and easiest way to do planning. Many people think of two trusts, right? Splitting everything between a husband trust and a wife trust. Well, this already makes it simpler. If you have just one trust, you can both put your assets in the trust, whether you contribute the joint bank account or the joint brokerage account or the joint real estate and rental properties. It's easy. Just put it all into one trust and you're both trustees. So funding is simpler, operation is simpler, and most importantly, you can actually get a better result for moderate estates from an estate planning standpoint. Because on the first death, you get to cram down all the assets that are in the joint trust to get a step up in basis, whereas if you've separated the assets between the two trusts, you're only going to be able to cram down half as much. And if you do the planning right, you can actually use these trusts to get a double step up in basis when the surviving spouse dies.
Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan. It's called The Simplicity of Joint Revocable Trusts. Call 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are rebounding and rallying after seeing the tech-heavy NASDAQ log its worst week since April. Sentiment was lifted last night after Senate lawmakers cleared a major hurdle toward potentially ending the historic government shutdown. Right now, the Dow is up nearly 0.3% or 126 points. S&P 500 up 1.1% or 79 points higher. NASDAQ up just over 2% higher or 466 points. Russell 2000 up 8%. 10-year Treasury yield is currently up 1 basis point at 4.104%. And crude oil dipping into negative territory, trading at $59.67 a barrel. Well, after initially opening the day higher, airline stocks including American, United, and Delta Airlines are now dipping into negative territory. Meanwhile, Taiwan Semiconductor saw its sales climb last month at the slowest pace since February 2024, but remained in double digits. That stock rising by 3%. Elsewhere, drug maker Pfizer agreed to buy weight loss startup Metsera in a deal that could be worth more than $10 billion. Metsera's stock is falling 15%, while Pfizer shares are down about 0.5%. Shares in video sharing platform Rumble surging nearly 10% after the company secured a $100 million advertising commitment from Tether, while also announcing a deal to buy German AI firm Northern Data for about $767 million. Instacart edging higher after the grocery delivery company posted stronger than expected quarterly results. After its 11% tumble last week over high valuation concerns, Palantir shares rebounding 8% today. And after today's closing bell, we'll see earnings from CoreWeave and Occidental Petroleum. I'm Tucker Silva, and that is Wall Street Watch.
Okay, let's get to earnings. I have some other things that are on my mind, but let's talk a bit about earnings just because I did tease it. So we're through 91% of corporate earnings season for the S&P 500. And according to FactSet, who is a data aggregator, 91% of those companies have reported, and the year-over-year earnings growth rate for the S&P 500 is 13.1%, which is pretty darn tootin'. Like, that is solid. Despite that, the S&P 500 has risen 1.3% since the kickoff of earnings season. What gives, Paul?
Ultimately, it's to me, it's a valuation story. You had a market that has run up significantly this year, and while using ratios like price to earnings and price to book or price to sales, they're not great short-term predictors. It does seem like that the reaction from investors and analysts out there is when you see these types of earnings numbers that we're seeing for Q3, it was more, and this is quoting directly from the Wall Street Journal piece, a sigh of relief than actually a positive surprise that provides more upward mobility to some of these stocks. We've talked about it a lot on this program before, but whatever valuation metric you want to look at, stocks are really pricey right now. And the numbers that we're seeing here in the current quarter, earnings season being reported, because we've seen such a run up this year in terms of stock growth and valuations on the tech companies, it's really just almost, hey, phew, they actually are growing rather than, oh, this is tremendous, the stock value should increase even more, is sort of my short takeaway.
When we look at the S&P 500, and this is, I want to look at this in two different areas. Let's first talk about just profit growth. So if you look at year-over-year profit growth, and I have this broken out by industry, no surprise, tech has the greatest profit growth out of any of the 11 S&P 500 sectors for this quarter, 27.1% profit growth, which is, I believe the technical term is en fuego. It's good. Financials, with all the trading that's going on, all the M&A activity, this and that, up 23% as far as their earnings. Utilities, 23.2%. Kind of surprising, but then when you think about all these data centers and this and that, and gee, like if you're an American who's kind of upset about your electricity price, you're sitting there going like, oh, utilities, their earnings grew 23% year over year. Man, so did my electric bill. That doesn't feel so hot. Granted, the average electric bill is not up that much, but you're still kind of like, oh, like what gives. Materials, earnings up 20% year over year. Industrials up 15%. Then you get to the ones that are moving more slowly. Consumer discretionary up 8%. Now remember, when we talk about consumer discretionary, the companies that have an outsized impact there are Amazon and Tesla. Mm-hmm. So, you do have to worry about like what concentration in some of these sectors tells you. Real estate, earnings up 6.1%. Healthcare up 5.2%. Consumer staples down 0.1%. Energy down 0.5%. Communication services down 7.1%. These are the earnings year over year. So you look at this and you're like, okay, like it's, again, no surprise. Like tech's been what's been growing fastest, and you get it there. The piece that is really interesting to me is what's going on in terms of revenue growth. Because obviously, look, tech revenue is up 15.4% year over year. It's the fastest growing even by revenue. Healthcare is next at 10.3%. But remember, healthcare profits only grew at 5.2% year over year. So there's, a margin issue that's happening there. Communication services, revenue up 10.1%. Remember, earnings were down. There's a problem there, but really it's specific to Amazon and just how some things were realized. Financials up 9.4% for revenue. And everything else is basically up 1 to 7.5% revenue-wise. So you look at the story here, and it's basically for tech and financials and utilities, margins are expanding and revenue's growing just fine. For everything else, revenue's growing, but margins are feeling some pressure there. And this gets at what we're seeing today in markets specifically, in my opinion, which is, look, you've got the idea that, hey, the U.S. government's going to reopen, and so you've got this exuberance that's going forth right now in markets today. S&P 500 is up 1.07%. You're like, okay, like, the U.S. is back, baby. Like, we're back. The S&P 500 equal weight is actually down 0.15% right now. Investors might want to own U.S. stocks, but they don't want to own the U.S. economy. Like, that's the message that I get from today. They want to buy tech and all that stuff. Investors are not interested in staples, real estate, energy, industrials, all that stuff that like actually makes the economy work. They don't want to own. And by the way, if you go and take a look this year at what's going on in markets, aside from, utilities, which is the outlier because of its, data center adjacent position that it runs in, energy this year up about 7%, lagging the broader index. Real estate up 3%, lagging the broader index. Consumer staples down 0.5%. Materials up 3%. Healthcare up 7%. Consumer discretionary up 5%. Like the stuff that actually makes the economy hum isn't humming in the market this year, Paul.
Relative to what, the tech sector and some of the other big performers.
Yeah, the stuff that's cranking again this year, it is tech, communication services, which is
really tech
basically Amazon
adjacent,
and Google.
Yeah.
And then you've got utilities, which is, again, adjacent. We've talked about that and why that's the case. And so you kind of look at it, it's like, yeah, like even the stock market is kind of K-shaped, right?
Yeah, that's a fair assessment.
Like even the stock market, you got tech and all this stuff flying, and the other half of stuff is just kind of treading water up very modestly. And I think it's pretty representative of what we're seeing this year broadly in the economy. Let's take a quick break. When we come back, President Trump over the weekend put out a social media post saying that he wanted to make $2,000 payments from tariff revenue to individuals. We will discuss after this.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Magens Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com. Estate planning isn't just about taxes. It's about peace of mind. At Cushing & Dolan, we believe your plan should protect your family, not complicate your life. A joint revocable trust can help you do both. It lets you avoid probate, which means no court delays, no public filings, and no stress for your loved ones. Your estate stays private, and your family stays in control. Our new guide, The Simplicity of Joint Revocable Trusts, also explains how a trust can protect your children's inheritance from creditors, divorce, or bad financial decisions down the road. This guide makes it easy to understand why a joint trust may be the smart move for your family's future. Call 866-848-5699 right now and ask for your free copy of The Simplicity of Joint Revocable Trusts. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, so over the weekend, President Trump posted on Truth Social, quote, "People that are against tariffs are fools. We're now the richest, most respected country in the world with almost no inflation and a record stock market price. A dividend of at least $2,000 a person, not including high-income people, will be paid to everyone." So this is obviously like we're getting back to stimulus checks now for the economy, which, again, now I'm really starting to feel like we're back in like 2021 now. I mean, it's just, you know, it's giving me a little bit of deja vu here on this. And here's the thing. If you take in $200 billion in tariff revenue and then pay out $2,000 to 100 million people, you effectively have not made any net revenue change to the federal government. On top of this, if you continue to, run 6 to 8% annual deficits, you continue to, grow the deficit year over year, both relative to GDP and in, nominal terms. And so I think, I'm really just not sure that there's a ton of appetite out there right now for $2,000 stimulus checks to be, handed out. I just don't know. And I think the other piece is, okay, if all the tariff revenue is just going to end up being taken and given back to people, then what did we actually do here?
I'm right with you. It seems like you have a couple risks that could come from this. One, potentially creating kind of more inflationary pressure by giving 100 million people. Did you just ballpark that number? Because it was unclear. Okay, yeah, because it was unclear. It just said no high income earners, but I wasn't sure if there had been a number sort of projected out there. But yeah, that hypothetically, that same exercise, you're putting $2,000 in everyone's pocket. We know what happened last time with the COVID stimulus checks. Those certainly allowed for a lot of people to spend more freely than they would have normally. So that's one aspect of things. And the second impact is, my view on tariffs, if they could go down to pay down some of our debt, that to me would be encouraging and something that certainly I could get behind from a fiscal monetary perspective. You could argue as to how much of a dent it makes when you're running 6 to 8% deficit each year and it's $2 trillion. But hey, $200 or $300 billion to pay that off is better than nothing. I would like that more so to go into that direction than a stimulative effort to individuals out there.
No one wants to be serious about the deficit.
Yeah.
It's been the last time anyone was serious about the deficit, you got to go back almost 30 years. I mean, you're talking 1980s, 1990s, when, again, members of both parties voted against kind of their own platforms and interests. People forget, Reagan raised taxes. Bush 1 raised taxes. Clinton cut spending. Those are not normal things from the respective parties that you're talking about.
Either side, yeah.
And they ultimately did it because it was the right thing to do. Now it's just, here's, the spend on this and spend on that and cut this and cut. It's okay, the reason why we're here is because no one wants to do the hard stuff.
Yep.
And until proven otherwise, that's kind of the case.
The U.S. Virgin Islands isn't just a postcard, it's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Magens Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and with that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
I got a bone to pick with Google.
Oh?
Yesterday at 4:17 p.m. Eastern Time, I received an email from YouTube TV, who is owned by Google, in case you didn't know. Hi, Chuck. Ooh, they know my name.
Wow.
Wonderful. They spelled it right, too. We have been working in good faith to negotiate a deal with Disney that pays them fairly for their content and returns their programming to YouTube TV. Good for you. We know it's been disappointing to lose Disney content, and we want you to know that we deeply appreciate your patience. Oh, thanks. Put me on hold. In light of the disruption, we're offering our subscribers a $20 credit. It's great. I'm going to get $20 off my next bill. Over the next few days, you will receive a follow-up email with instructions for how to redeem your $20 credit for YouTube TV. So, you bunch of, greedy little, gremlins, what the heck? You say you want to give me a credit, but I got to freaking opt into the credit?
That's right.
Because you just want to be like, oh, someone out there isn't going to figure out how to, probably because, hey, maybe they're not the most tech savvy and maybe their kids set this up for them. And so they're going to miss out on the $20 credit because you need that $20 to fund some data center you're building that's going to eat all of our electricity and water. So, like, my goodness. Now, here's the thing. To anyone listening who subscribes to YouTube TV, go on to tv.youtube.com, click on your, sign in, and then go to the settings menu. It's in the top right.
Too many steps already.
Exactly. It's in the top right. Then once you're in the settings menu, click on the update selection, and then you can redeem your credit there.
Like, that's simple, but to go through all those steps is aggravating, and a lot of people are just going to punt on that.
Google's going to end up making millions of dollars because they made the credit claiming process too difficult. So, this, again, sometimes I when we talk about greedflation and this and that, I like to poo-poo because I'm like, look, greed didn't cause inflation. Companies are always greedy and there's not always, high inflation. But when someone says, hey, we're not giving you the product you signed up for and we want to give you a credit, and then they make you go through a 4-menu screen to go and authorize the credit, that's greedy. And it sucks. And
yeah, just do it.
I don't like it. Just give me the freaking credit.
Just discount everybody.
You
have to opt into it.
I just don't get it.
Not everyone's going to want that, Tucker. They got to opt in.
Right. This is where you get the social media influencers. I was born tough, and that's why not only did I opt out, I emailed YouTube to see if they'd charge me $20 extra this month.
So they're pushing back against Disney and all the channels that go underneath that in terms of what they want to charge in the upcoming cycle to be on YouTube TV. Basically, they're claiming
Which,
it's
look,
too
they
much.
can fight it out. It's fine. I understand it. I don't have a problem there. But if you're gonna say, hey, you're not getting the product that you signed up for, and here's a credit, don't make me sign up for the credit. You don't make me sign up for YouTube TV every month,
right?
Because you want the recurring subscription revenue. So don't make me sign up for the credit. Just give me the freaking $20. You greedy little, gerbils. What are you doing, you people?
So no Monday Night Football for you tonight, basically, unless they get this resolved during the day.
I'm in bed before then anyways, unless it's the Pats. I do not make it past 8:30, so it's fine. But
they're number 4 now. They got 10 million subscribers. YouTube, they're a pretty serious player, YouTube TV.
They're not tiny.
Yeah.
Tucker, we supposed to have some... there it is. Nope.
Yeah.
There it is.
It's just, being stupid.
Okay.
There you go.
Got
All
it.
right.
I thought we were done. We're going to take a quick break now. We're done for the hour. And we'll be back in just a bit.
Secondary education. We are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network. Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Owning Real Estate in Retirement. Mike, for someone who wants to own multiple properties in retirement, maybe a warm weather and a summer property, What do you end up doing as far as, trying to negotiate and navigate that decision?
Well, it's a lot of questions to answer. How much time are we going to spend in one place versus another? Where am I going to be a resident? If I am, leaving between two different homes, where do I feel comfortable being a resident? I get this question all the time. How much will I get in tax savings, for instance, by moving to a no income tax state? And what ends up happening, though, sometimes is they make that decision based on income tax and don't realize where a lot of the cost savings comes, which is estate taxes. And so if I'm going to own multiple properties, where do I intend on actually making my residency? And will I be able to commit to that for the long term is an important one.
Another piece there, look, at a certain point in everyone's life, that travel and moving between two places and even maintaining two places becomes challenging. When do you typically see those kinds of conversations being navigated?
For most folks, I see it in the 70s and early 80s. That's when this stuff starts to change for a lot of people, but ultimately it's customized to each individual, and you might be able to afford one scenario if you're willing to rent out your property for a period of time.
Sure.
It really comes down to customizing for your situation.
Our guide this month is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001 or going to armstrongadvisory.com. That guide again is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment advisory services. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck Paul Tucker with you here today, and in case you missed the news over the weekend, it looks like we're getting closer to a resolution to end the government shutdown. The Senate yesterday passed a bill by a vote of 60-40 to clear a key procedural mark. We're still not fully reopened because the Senate has to actually pass the bill that it wants to. Then it has to go to the House because it'll likely have some changes from the original House-passed legislation. And then you'll finally get this thing done. The estimates that we're seeing, most likely later this week. There's obviously a chance that things could go badly, but at this point it looks pretty clear that the federal government's going to be reopening within the next 3 to 5 days, barring unforeseen developments. So, in response to that, we had a nice rally to start the day off today. S&P was up as many as 82 points. It's retrenching some of that now, still up 47 points, but the Dow has now gone negative, down 10. NASDAQ is leading the way, up 300 and some odd points, about 1 1/3%. So, again, it's tech that is kind of in the driver's seat here as we emerge, or we try to emerge from the shutdown. And so that is what is going on in equity markets. In the bond market, the 10-year Treasury up 1.7 basis points to 4.11%. We got the U.S. dollar index up 0.1% to 99.57. And gold on the back of this, we can talk about this later if we want to. Gold up about 2%, $82.30 to $4,092.10. And we got crude oil down 16 cents a barrel to $59.59. The AAA national average for gas prices up 0.1 cent overnight to $3.07 1/10. Paul, we got a piece here today. It's from Barron's. It's titled "How 3% Inflation Became the New Normal." And I think that outline to me what this piece says.
Basically, what this piece covers is the Fed has a long-term target for inflation to sit at 2%. Many listeners out there will recall back in 2022, we peaked out as high as 9% on the inflationary front. Since then, there's been tremendous progress made to get us to the 3% that we sit at today. However, we have plateaued at that 3% level for quite a period of time here, and there hasn't been meaningful progress towards driving it down to 2%. And what this piece cites is many expectations for inflation moving forward, whether it be from the Federal Open Market Committee or others who sort of do projections as to where they think inflation is going to go. Surveys seem to be indicating that we're moving further and further away from that 2% anchor target that the Fed has targeted. And really where this is interesting to me, and I'm sure you have commentary on it too, is this is a target that the Fed has. It's not ironclad that it has to be 2%, but it's something they're shooting for. And what I continually debate is whether or not it has to be at this level. Is it problematic for it to be at 3%? I think you and I can kind of debate you can have really two sides to the argument to that. Some people could say that, hey, if it is anchored in at 3%, then you can kind of create this spiral impact where if I think prices are going to rise by 3% every year, I'm going to turn to my employer more quickly and more readily and say, gee, if prices are going to continue to go up, you need to pay me more. And as a result of that, if the employer, follows that move lockstep, they have to increase prices. And so there's this psychological impact it can have that if it is anchored at 3%, that's problematic because it leads to that spiral. On the other end, you could kind of say that, 3% still allows some flexibility for the Federal Reserve to move interest rates around a little bit more if you're sitting at that level.
Sure.
And that it could kind of be eroded away over time, some of the debt that people have if inflation is marching at that level. So I'm always interested, and I don't know where you sit on that side of the argument, but it's something that I don't think you can have a clear-cut winner on, but there's differing views out there.
Yeah, and Mark Fandetti, it was a great summary there, by the way, Paul. And Mark Fandetti has talked about this, and that if you look at a lot of the academic literature on this, there's no consensus as to, this is the right rate of inflation. Academics are generally, hey, you can be anywhere from 1 to 5% inflation. And as long as you're, again, kind of anchored there, there's beliefs that you can be okay in those areas. I generally tend to err on the lower side of things just because people really just don't like inflation. Even if you make 4% more this year and your stuff costs 4% more, you're like, oh, I'm making more, but it feels bad because you're not buying more. It'll piss you off more
on the price going up.
Correct. So I think I generally err towards... Yeah, I'd prefer lower, all else being equal, but we've had good economies with 3% inflation. We've had bad ones with 1%. There's nothing to say this is the right inflation rate. And remember, when we're talking about inflation, folks, what we talk about is the rate of inflation. We're not talking about what prices are, because prices basically never go down. In the aggregate, you never see that. Yes, you can see the price of eggs go down, but it happens as the price of beef's going up, and so your grocery cost, this is just how it ends up working. So I don't believe that there's any right rate of inflation because I think it would be I'd have to have an awful lot of hubris to be like, thou shalt run at 2% inflation. I don't think any human being can say this is the right rate of inflation.
Exactly. The key word that you mentioned is anchored. It has to be at a steady level of inflation, whether it's 4%, you could maybe argue it's too high, but whether it's 2% or 3%, as long as it's marching along on that trend steadily, then it makes for a more palatable economic environment. If it starts swinging between 1 and 4, that's when you're going to have problems, and it's going to be more challenging to operate.
And those problems, by the way, are numerous. Number one, if you have inflation that's consistently moving, having large swings, your banking sector is going to say, hey, because we don't know where inflation is going to be in the future, we need to charge you higher interest rates in order to give us more cushion.
Yep.
So you see stuff like that develop. You see businesses saying, hey, we don't know what the cost of our goods are going to be, of our inputs are going to be next year. So we're going to raise our prices preemptively, and this is how you get, more consistent higher inflation and higher prices. So those are the things that you worry about then. And the other place that I worry about it is in the context of we're not very responsible when it comes to anything fiscal nationally these days. Haven't been for about 25 years. This spans 1, 2, 3, 4. This spans 5 different presidencies from both parties. You got to go back to, again, the 1980s and 1990s to find the last time that we cared about this stuff, because the problem is if you have 3% inflation at a time where you don't really seem to care what your deficits are and you're willing to push as much spending as possible to juice the economy, which is pretty much what we've been doing for 25 years now, it creates the conditions for that inflation to move higher and become more entrenched at a higher level. And that's potentially dangerous. So 3% inflation, not necessarily bad. It's, again, I'm not saying this to let the Fed off the hook or anything, but the late 1990s, you had 3% inflation through the 1990s. I think a lot of us would look back and be like, yeah, it was a pretty darn good period. Things were pretty okay then. Granted, then you had, the tech bubble bursting, and you're like, okay, this is not okay. And then the housing bubble burst, and you're like, this still isn't okay. And then you had, high inflation and shutdowns and this and that, and you're like, this still isn't okay. But for a little brief period in time, you were like, yeah, this is pretty cool. Let's take a quick break. When we come back, let's do a little bit of trivia, and then we'll talk about Meta, how much of their revenue comes from ads for fake websites that sell you fraudulent products.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at Armstrong ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Well, this year's DAV 5K was another incredible success with over 1,500 runners and walkers, all supporting the Disabled American Veterans Department of Massachusetts. The race results and photo galleries are available to see. And if you didn't have a chance to participate but would still like to support our great American heroes, please visit dav5k.boston. Your gifts help fund free rides to medical appointments for veterans in the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston. Time for trivia here on the Financial Exchange. And on this day back in 1989, German crowds began demolishing the Berlin Wall. Over the next couple of months, celebrations were held throughout the city, culminating with a New Year's Eve concert at the Brandenburg Gate. Trivia question today: which American actor and singer performed his hit song Looking for Freedom at the New Year's Eve concert at the demolished Berlin Wall? Once again, which American actor and singer performed his hit song Looking for Freedom at the New Year's Eve concert at the demolished Berlin Wall? Be the third person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Meta, the company behind such blockbuster products as Facebook and Instagram. In fact, they used to be called Facebook, didn't they?
Yes.
What a wild concept for them to be named after something that people actually think about instead of the metaverse, which no one thinks about. So Reuters found some internal, or not found, I guess somehow they received a report that Meta published internally that they project 10% of their 2024 revenue would come from ads from scams and banned goods, which seems bad. Mm-hmm. Specifically, and the numbers are just mind-boggling. Meta estimates that its users are shown 15 billion scam ads per day. Now, these can take a couple different forms. The two that are most common are, well, there's really three that are most common. The first is, hey, company that says that they are selling products from, product X, Y, and Z, and instead they're selling a cheap knockoff or something like that. Number two is companies that claim to be company X, but then you get redirected to a website that looks just like company X's, and then you enter your credit card information. They don't actually send you anything, and they steal your credit card information, which is kind of bad. And the third one is, hey, we're selling this product and it's not allowed because of, safety concerns or a recall or this and that, and they take your money and send you the product that could hurt you, which is bad. So Meta estimates that, again, 10% of their ads that they serve are scam ads. And the reason why is that they don't go through and manually deal with this. Instead, they have basically a software program that tries to identify if an ad is fraudulent or not, and only takes the ad down in the event that there is a 95% probability or higher that the ad is fraudulent. Now, I've actually been on the bad side of this, believe it or not.
Really?
It was, I can't remember if it was an ad or just a post, but this was like 10, 12 years ago, something like that. I can't even remember exactly when. But it was specifically something about IRAs, which, being someone who's, interested and involved in finance, like IRAs come up quite often.
Sure.
Meta decided that they were going to take either the ad or the post down again. I can't remember what it was, because they thought it was a reference to a different IRA.
Oh, sure.
The
Irish one?
Yes, the Irish one. And so they were like, no, you can't post this because it's like terrorist insightful content. And I'm like, guys, did you actually read this? It never ended up actually being allowed to be, I went back and forth with an algorithm or some fake human or something forever, and basically couldn't make heads or tails of this.
Wow.
So I've been on the other side where it's they're too
they were
aggressive
hyper
on
vigilant
this stuff.
there.
But the idea that Meta's just cool with this and no one cares about it is kind of wild.
Well, not only that, they up the price for those scam ads so that they theoretically make more money on those ads, but also their caveat is that's to act as a deterrent from them being posted. But, oh, by the way, they're charging a higher rate for those type of ads than a normal ad would be charged.
Meta spokesman Andy Stone said the documents seen by Reuters, quote, present a selective view that distorts Meta's approach to fraud and scams. The company's internal estimate that it would earn 10.1% of its 2024 revenue from scams and other prohibited ads was rough and overly inclusive, and the company had later determined the true number was lower because the estimates included many legitimate ads as well, but declined to provide an updated figure. Okay. So again, these are the people that are trying to become our new AI overlords. And they're cool with serving up, again, even if it's not 15 billion, let's say that it's 5 billion a day fraudulent ads. They're cool with that because it helps their bottom line. That sucks. That's
hard
just,
to put a positive spin on that one.
It's just not, and no one seems to care about this. There's no congressional hearings into this. There's no new legislation to penalize companies that do this stuff. It's just
because that Meta could have the technology in place to be more aggressive with, or they could peel back their percentage from 95 to 85, and all of a sudden that would weed out a significant amount of those, you would think.
These are not dumb people.
Yeah.
Here's the thing about Meta. I might not like them, but they're really smart.
Yeah.
They're just choosing to use their smartness to serve 15 billion scam ads a day because it benefits their bottom line. I understand the financial incentive for them. Number go up. Got it. It just kind of sucks for the rest of us that have to be served the scam ads thinking that we're buying McCormick spices when in fact we're being redirected to some place that turns me into cinnamon or something like that. I just...
I don't think that was the case in that one, but I will say very convincing ad setup. It looks very legit.
It does. It looks
spice-wise,
completely
I will say.
legitimate.
Some of these other ones in the front of this article, I can see the scamminess, but I will say they did McCormick's pretty well.
No, I don't want to be cinnamon.
More of a paprika guy personally, but hey, your mileage may vary. Taking a look at markets as we head towards the bottom of the hour. The Dow is down 15 points right now. The S&P is up 48. NASDAQ Composite up 315. So market's still mixed here. And big thing that, we're continuing to see. You look at kind of your leaders out there. Palantir's up, AMD's up, Tesla, NVIDIA. The stuff that was selling off last week, coming back. The stuff that was trying to keep markets afloat last week is kind of getting whacked here. And so it's something where this tug of war is still going on, and it still is a market that doesn't have a clear direction for the last month and a half now. It's just kind of chopping around. And again, generally, Markets correct in two ways. They correct through time or price. You can have a market that pauses for 2 or 3 months and then decides to carry on its merry way after its concerns are addressed. You can have a market that says, oh, things are getting worse, and then it moves down. But right now, no clear direction at all. A little bit up, a little down, and you're just kind of chopping around here as we go through November. Let's take a quick break. When we return, we got the trivia answer, and we are doing Wall Street Watch after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all 3. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, for couples who already have wills in place, why might it make sense to look at a joint revocable trust, and what can it do that a simple will can't?
Yeah, this is important because a lot of people believe that wills are an estate plan, when really a will is a won't. I've said it many times. It won't avoid probate. It won't reduce estate taxes. It won't protect assets from the nursing home. You're going to need some kind of trust to do that. So that's the most important reason why a will is not enough. Then you need to think about, well, what kind of trust are you doing? Well, in this case, we're talking about joint trusts. And boy, folks, these are so underutilized, but they are really powerful for moderate estates. And today, moderate estates are, below 15 million with the exemption as high as it is. So you can actually make it easier for folks. Put all the assets into this trust. You can jointly put your brokerage accounts and real estate in the trust. It's simple. You don't have to split assets between two trusts. Ease of operation, and it's going to reduce estate taxes, avoid probate, and provide a bloodline plan for your family, even to the extent where if you want to protect it from future creditors and divorces of the kids, you can do that in the trust as well. And the will won't do any of that.
Cushing & Dolan have been helping families like yours for more than 40 years now. Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan called The Simplicity of Joint Revocable Trusts. Call 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets rebounding after the tech-heavy NASDAQ logged its worst week since April. Sentiment was lifted last night after Senate lawmakers cleared a major hurdle toward ending the historic government shutdown. Right now, the Dow is up merely 3 points, completely flat. S&P 500 up over 0.75% or 52 points. NASDAQ up 1.4% or 325 points. Russell 2000 is up just over 0.5%. 10-year Treasury yield up 2 basis points at 4.114%. And crude oil down about 1/3%, trading at $59.57 a barrel. After initially opening the day higher, airline stocks including American Airlines, United, and Delta are all now down about 1%. Meanwhile, Taiwan Semiconductor saw its sales climb last month at the slowest pace since February 2024, but remained in double digits. That stock is up about 2%. Elsewhere, drug maker Pfizer agreed to buy weight loss startup Metsera in a deal that could be worth more than $10 billion. Metsera down by 15%, while Pfizer shares now down over 1%. Video sharing platform Rumble is seeing its stock jump nearly 7% after the company secured a $100 million advertising commitment from Tether. Instacart up about 2% after the grocery delivery company posted stronger than expected quarterly results after its 11% tumble last week over high valuation concerns. Palantir shares rebounding 6% today, and after today's close, we'll see more earnings from CoreWeave and Occidental Petroleum. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: which American actor and singer performed his hit song Looking for Freedom at the New Year's Eve concert at the demolished Berlin Wall? That would be the Hoff, of course, David Hasselhoff. Nina from Nina Mass is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Nina. We play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Paul, do you want to talk about AI-fueled layoffs or buying a home?
I like the buying the home piece. Let's stick with that one.
All right. Talk to me about it.
So a couple of different things going on in the housing market. I mean, not major changes from a trend standpoint, but this particular piece by Alison Schrager here out of Bloomberg talks about the rise in the median age of homeowners, the first-time home buyers in the United States, where it is now up to the age of 40. That is the average age of a first-time home buyer. That was just 33 a few years ago, and I believe 2021. And if you go back to 1981, it was at 29. And obviously, many of us know the major culprit for that, of course, is that the affordability of homes has increased quite a bit. You also have household formation being delayed a lot longer than it was in the 80s. In the piece, it goes on to talk about how while it is the American dream to own a home, it doesn't always make sense for most people. There is still a lot of value that can be gained from the rental market. And certainly I see both sides of it. Sometimes, I don't know if you feel the same way, but around the house, a million different things are breaking or you're having issues with it and you just look and say, geez, it seems like this is a nonstop battle to sort of suppress all these different things that are going on at once that comes with homeownership. And I look back to my rental days and say, wow, it was a lot simpler just to kind of show up and not have to deal with these type of things. But this is the conundrum that many people find themselves in, just really difficult to find a house. And it comes all back to the supply issues here.
It does. It's supply and demand. And I also don't love just that home ownership has just, and look, it's always been this way to a certain extent, but it's more evidence that, hey, you're going to be able to make it further financially by buying assets than by doing work. You know, it's like you look at millennials who were able to buy homes back in the 2010s. I was fortunate enough to be one of them.
Mm-hmm.
Again, I had an FHA mortgage on a 3.5% down payment because I didn't have any money saved for a down payment. Like, anytime that someone, like, tells you, like, oh, like, just, like, save for it, like, when you're, like, 25, 26 years old, it's not easy to save that money for the down payment. And the only way I could do it, quite honestly, like, you talk about things that are not great financial sense, I pulled a bunch of money out of a retirement account in order to be able to do it, actually, because I didn't have other savings. So, like, I'm not one of these people who's like, oh, like, never do this. Never. No, like, I had an adjustable rate mortgage with 3.5% down, pulling money out of my retirement account to do so. It's the only way I could figure it out. And it was still kind of, like, really overwhelming for the first year or so. Just the idea that it's like, some bank lent me hundreds of thousands of dollars, and now I need to pay that back.
Right.
So it does take a lot to get there, and it's not always going to be easy and everything. But I think, quite honestly, it's kind of it's tough for me to see that, like, so many people can't get to that point, because it is something where, hey, if you have a good housing market and you've been able to buy with a relatively small down payment, that leverage can work wonders for you and give you a huge kickstart to buy that second home then.
That 20% down is just so difficult, particularly around the greater Boston area, to save that, where you're averaging homes that are close to $1 million in a lot of these communities. It's challenging. The other piece here in the Boston Globe just talks about kind of a conundrum that I found myself in too. Just you buy the first home and sort of the being not stuck in it necessarily, but stuck with a low mortgage rate and trying to figure out what the next move is to that second home eerily kind of reflects some of the things that I've dealt with, where we have 1.5 bathrooms in our home, and another homeowner in this Boston Globe piece mentions the same thing, where with 3 young kids, you start to look to the future, say, hey, at some point in time, it's going to be time to move. But it's hard when you're locked in at these lower mortgage rates of yesteryear of the 2020s to say, all right, it's time to buy the next home at twice the mortgage rate, or you're looking at renovating, which is not cheap either. That's what a lot of homeowners find, and that rings true for me as well.
Yeah. Folks, the Armstrong Advisory Group does have a guide available this month, specifically focused on real estate. It's titled Owning Real Estate in Retirement. It talks about considerations for owning a primary residence in retirement, or, as we're starting to see in increasing numbers, does it make more sense to be renting in retirement? Beyond that, hey, if you own a second home, what are the considerations for maybe when you decide to move on from that and consolidate down to just one property that you own? Even beyond that, hey, what about if you own rental property? What are some of the considerations for that in retirement as well? Again, the guide is titled Owning Real Estate in Retirement, and the way to request the guide is by going to armstrongadvisory.com, clicking on clicking on the button to request the guide, or you can call 800-393-4001. Again, you can go to armstrongadvisory.com or call 800-393-4001 to request the guide, Owning Real Estate in Retirement.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's see. What do we want to talk about now? Vet bills? No. Not really feeling the vet bills.
They're high.
They're high. Wendy's closing hundreds of restaurants?
Yeah, why not?
People not liking the junior bacon cheeseburgers anymore? What's going on, Paul?
A little bit of
JBC fan.
A little bit of a turnaround planned here, Chuck. They've got about 6,000 U.S. locations that they could close, but wait, that's worded weirdly here. 200 to 350 restaurants,
mid-single digits,
would be closed out of their 6,000 locations here, and they are just looking at the ones that are underperforming and dragging down the chain's overall performance. It's interesting. The fast food sector in general, McDonald's has been dealing with this, trying to find the value-focused customer out there. There had been sort of a split there. You're seeing fast casual lose some momentum, and perhaps Wendy's, catching some of that in the fast food space as well, not performing.
How does it work? The restaurants that they may consider closing, are those all corporate owned, or let's say that you're a franchisee that owns a Wendy's franchise, what happens to you?
That's a great question. I've seen it similarly with Dunkin' Donuts locations. I don't know if you've ever bumped into this, but there's a lot of them in gas stations around my area that I would hit, and several of them have closed recently. I just kind of wonder who's behind that decision. Is it Dunkin' Donuts corporate that's saying you're underperforming, so you need to go, or is it something that is a mutual decision between the franchisee and the franchisor, like Wendy's?
Yeah, I don't know enough about the franchise business model to be able to say here's what happens in that event, because oftentimes you pay for that franchise fee a certain amount,
right?
And then there's certain revenue that you have to kick back to the company. There are certain expenses that you have to pay for that the company says, physical improvements and things like that. But I've never even seen a franchise agreement, so I don't know what it says. Hey, if corporate decides you're closing,
they must have some sort of term.
There has to be something in there. I just don't know what it is.
I'd be interested. Text us if anyone's a franchisee owner, 617-362-1385.
Otherwise, I'll have to ask ChatGPT and just accept whatever it tells me.
Who knows what they're going to
franchise owners of fast food restaurants, yes, please text us at 617-362-1385. And also let us know what your favorite Wendy's order is as well. Quick break here. Stack Roulette is next.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com. Estate planning isn't just about taxes. It's about peace of mind. At Cushing & Dolan, we believe your plan should protect your family, not complicate your life. A joint revocable trust can help you do both. It lets you avoid probate, which means no court delays, no public filings, and no stress for your loved ones. Your estate stays private, and your family stays in control. Our new guide, The Simplicity of Joint Revocable Trusts, also explains how a trust can protect your children's inheritance from creditors, divorce, or bad financial decisions down the road. This guide makes it easy to understand why a joint trust may be the smart move for your family's future. Call 866-848-5699 right now and ask for your free copy of The Simplicity of Joint Revocable Trusts. That's 866-848-5699. Or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Your next incredible vacation is a click away. And if you act fast, you could be on St. Croix to experience their Crucian Christmas Festival taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment, or just go soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your escape now and visit usvi.com. That's visit usvi.com. And just a reminder, the Financial Exchange streams every day live on YouTube. Subscribe to our page and follow market activity all morning long, only here on the Financial Exchange Radio Network.
Paul, what do you got for Stack Roulette?
Chuck, as an Italian yourself, I don't know if you're concerned about this, but Italian pasta is poised to disappear from American grocery shelves perhaps come January, as the Trump administration is set to impose duties of 107% on Italian pasta imports, one of the most punitive of the tariffs that they have levied this far. It is a portion of it, 92% of it, an anti-dumping duty on pasta made in Italy. And then there is also the additional 15% tariff on imports from the EU. Having feedback here from one of the executives of a Italian pasta manufacturing company saying that it's an incredibly important market for us, but no one can maintain, of course, those type of margins. They would have to pull from the shelves in 2026 if this were to actually go into effect. Concerning news here for pasta eaters.
You saying we're going to have a pasta shortage?
If you like your Italian pasta, you might. Plenty of other American choices out there, but we all know that not as good as the Italians do it.
No, we can't be having any of this here. We can't have a pasta shortage heading into the Christmas season.
That's true.
My goodness. Those 7 fishes aren't going to feed themselves, huh?
No, they're not.
They're not.
No, they're not.
You got a favorite pasta, Paul?
Typically linguine guy.
You're a linguine guy.
Yeah.
Okay.
No surprise there,
Tuck,
right?
what about you? I'm a little surprised.
Why? What'd you think? It's like the most basic choice.
I don't think linguine is the most basic choice.
You don't think so?
The most basic choice is probably elbows.
Or I would have, I would have even said spaghetti is more basic than linguine in a long format.
If I'm being honest, it's probably spaghetti. Yeah,
I like a nice pappardelle.
Oh, sure.
Rigatoni, Something like that.
I'm a short pasta guy myself, so a little fusilli.
Fusilli Jerry.
Fusilli does a little nice work. I also, a little farfalle, if you like a little bow tie. That kind of action can do well.
Nah, it's too cute.
What about a little rotelle, the little wagon wheels?
No.
Not a rotelle fan.
No, that's silly.
What do you mean silly?
It's just a wheel.
You know what I got to say used to be great? There was a restaurant in Milton that used to do rigatoni, but they did it with the wagon wheel, the full length. So it was like a long wagon wheel.
Okay.
Spectacular, just because you get the sauce sticking to the entire inside of that thing.
Oh, I know what you're talking about. Okay.
Yeah. Uh-huh. Now you're cooking. The other things, actually, if I'm going my favorite long pasta, bucatini. Gotta love
That's
a bucatini.
in our pantry weekly.
Because that way you get that sauce just coming right up the middle there, and it's just outstanding. I want to talk a little bit about this Major League Baseball gambling scandal. You've got a couple new charges here. Not new, it's obviously new. You got a couple charges in this scandal. So remember, a couple weeks ago you had this NBA one. Now you've got Cleveland Guardians pitchers Luis Ortiz and Emmanuel Clase, who have been charged with fraud, basically for manipulating pitches to try to get bets to pay off on different betting platforms. And all of these different sports leagues will, tell you, this is a horrible thing and this can't be happening. And then here's the parlay of the day brought to you by blah, 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 blah. And I honestly, at this point, here's where I've gotten to. I've said this before. I'll say it again. I think it's totally fine if you want sports gambling to be legal. I don't think it should be allowed on phones because it is becoming a scourge on society. And it's too easy to make these bets on phones. You can't police it appropriately. And it threatens the integrity of these games, which, quite honestly, look, they're sports. I'm a huge sports fan, but ultimately, even I realize sports is kind of dumb. It's literally hey, let's take this oblong-shaped ball and try to get it across that line there, and these guys can tackle us to stop. I love football. I watched the entire Patriots game yesterday. It was fantastic. Sorry to our, Tampa Bay listeners, but ultimately, sports are, I realize that they're dumb. It's, hey, let me take this, golf club out and see how far I can hit this ball. It's dumb. When we're getting to the point now where professionals are changing how they play the game because of, extra money that can come their way that, makes the game not be legitimate anymore. When you've got professional athletes across major sports that are saying they're being threatened on social media because they didn't hit this bet or that bet, we've gone too far, and we're starting to lose, the fact that we're human beings and are supposed to have souls.
I'll push back on some of it here, where some of these issues on gambling, there's definitely going to be more of them to come out, to be clear, but this goes back 100 years. I mean, if you go back to the Black Sox, it's always been, not always, there's always an underseedling of this kind of stuff that goes on. I would argue, you're right, it probably is more prevalent now just because of how just it's really become pronounced in terms of how many platforms are out there, and there are going to be more bad actors, I'm sure, over the course of the next few years or so, but ultimately, hopefully they can get it into a better place. There are some pros and cons that come with it, that's for sure.
Let's take a quick break for the rest of the day. We're going to see you tomorrow on the Financial Exchange. We're looking forward to it. Hopefully you are too. Thanks for listening. We'll catch you then.